Blockchain in supply chain and transportation. This is a very big area right now, and there's massive potential at what can be done in this particular industry. And obviously, there's many components to this, and there's countless ways to integrate this into the transportation, logistics, supply chain industry. Logistics are managing the flow of things from the point of origin to the point of consumption is the backbone of almost any business. And of course, the logistics industry. If you have a physical product, somehow you must deliver to your end customers, and they are likely to live next door. In the era of globalization, sellers and buyers are typically separated by long distances, state and national borders, and sometimes oceans international borders also. Bridging distances between sellers and buyers typically involves different means of transportation, tons of paperwork, and multiple parties. What is worse, because these parties are frequently strangers to each other, there may be a lack of trust. Companies employ logistic management software to automate some operations and processes along the way. Many of these challenges can be addressed using blockchain technology, which would offer, or already do offer, businesses and companies a totally new approach to logistics and the entire supply chain management process. Moving on, business logistics and discussing opportunities and benefits. In simple terms, blockchain is a chain of blocks used for recording transactions. Initially invented as the digital ledger for the first decentralized cryptocurrency, Bitcoin, this technology proved beneficial for many industries, including fintech, travel, insurance, medicine, and many more. The unique advantage of blockchain is its capability to resist modifications and ensure end-to-end transaction transparency. The ledger is a pin-only structure, so once added, a record cannot be changed or deleted. It allows users to trace a product through the whole supply chain starting from its origin. And what specific transportation logistic industry could such an approach resolve in the first place? Blockchain gives the opportunity to provide a single source of truth record of all the touch points and documentation that occur as an asset is transported from point A to point B by any number of carriers. This can include custom documentation, tariff records, bill of lading, and even incorporate information on sensors such as temperature, humidity, etc. Consequently, both shippers and receivers are able to track the location condition of their shipments along the way. Moreover, this could lead to enhanced traceability and security so that records cannot be lost, destroyed, or replaced. On top of that, a blockchain-based system eliminates the risk of documents or goods being stolen through fake identifiers and safer, more transparent transactions, leading to trust among all parties involved. And also less manual work and no delay in paperwork, thanks to smart contracts, which are self-executing contracts with the terms of details written directly into a program's code. All the agreement conditions can be fulfilled by a machine without any human intervention. It's also worth noting that currently the international transportation industry still relies on paper legal documents and electronic data interchange, or EDI technology, for exchanging digital messages. The set of protocols from the previous century that cannot provide real-time information. On top of this, shipping parties often have to transmit documents via email, fax, or courier. In the ideal blockchain world, all these time-consuming and error-prone processes will be digitized and automated, with every step verified and forever documented in the decentralized ledger. Blockchain applications in logistics and transportation are mostly in their pilot phase today. There are many issues to be overcome before widespread adoption of these apps and systems becomes reality and practical. But some solutions are already generating value for this industry. And below we'll discuss some of these issues that are being resolved currently. First one, container shipping. Maersk and Port of Rotterdam bringing transparency in global trade. Maersk is the world's largest container company, introduced the first blockchain fuel shipping platform called TradeLens in 2018. The Danish shipping giant that has approximately 20% of the global market share created its advanced solution on top of IBM blockchain platform, which in turn uses open source Hyperledger Fabric code base from the Linux Foundation. Companies can integrate their existing in-house systems with TradeLens through open APIs and seamlessly connect to multiple supply chain partners, exchanging real-time data and electronic documents across all parties involved in the shipment process. Participants can create channels or separate ledgers of transactions, and it allows members to show their special terms or prices only to specific partners, preventing the sharing of this data with competitors. As for the end of 2019, over 100 organizations, including large open carriers, joined the platform, representing nearly 60% of global container freight. Another blockchain initiative in the field of container shipping was introduced by the Port of Rotterdam, Europe's largest and busiest port, in partnership with ABN AMRO Bank and Samsung, which launched the blockchain-based industry-neutral platform called Deliver. The goal of this project is to optimize both physical and financial processes in the supply chain. In July 2019, this platform enabled the first completely paperless end-to-end track shipment. 2 containers successfully delivered cargo from South Korea to Tilburg in the Netherlands via the Port of Rotterdam. Now moving on, freight invoicing being done by DHL Global Forwarding, which focuses on one-off orders. While Maersk and other shipping giants strive to create the end-to-end supply chain system, DHL Global Forwarding and Air and Ocean Freight Division of the world's largest logistics brand invest in solving a more specific issue. Since July of 2019, the industry leader has been collaborating with HP Enterprise to build a blockchain app eliminating errors in one-off orders, or request for shipments lying outside a standard freight contract. Testing the minimal viable product, or MVP, proved that, among other benefits, technology could dramatically simplify the approval process and ensure 100% invoice accuracy and minimize manual interventions. Now the freight giant is looking forward to expanding the use of the solution. Now the next one is in food supply chain with Nestle, Unilever, and Walmart, and ensuring the safety of their products. When it comes to food supply chains, things get even more complicated because of the perishable nature of edible products. And that's where unrivaled traceability offered by blockchain can support good health and save lives. In addition to time and money, according to the WHO, World Health Organization, almost 1 in 10 people in the world fall ill because of contaminated food, with 429,000 dying annually. And existing regulations oblige food business operators to comply with a one-step back, one-step forward rule. For instance, retailers are required to know immediate suppliers one step back in the supply chain, and direct buyers one step forward in the supply chain. Considering the food supply chains are highly fragmented, with each company relying on its own separate software system, sellers may have no clue where their products were packed or grown. So in the case of a food-caused disease outbreak, it is often hard and perhaps not possible to pinpoint the source of contamination. To achieve from farm to plate traceability and thus enhance food safety, 10 leading food producers and retailers, including Nestle, Unilever, and Walmart, teamed up with IBM to build the Food Trust Network with Hyperledger Fabric at its core. Currently, the initiative involves more than 80 companies. Walmart already ran 2 blockchain pilots. One involved tracking mangoes sold across the US, and the other covered the journey of pork in China. And both trials proved the ability of blockchains to maintain strict quality control along a supply chain and reduce the time needed to determine the product's origin from a few days to a few seconds. In the case of mangoes, from almost 7 days to just 2.2 seconds. And today, organizations can supply data and in that way tap into the IBM food blockchain ecosystem for free. Fees charged for software as a service modules, including tracing goods for safety, depend on company size, starting at $100 monthly for small businesses. Another example of blockchain ensuring food traceability is given by Chinese e-commerce giant JD.com. Since 2017, the company has been using the distributed ledger to track the journey of beef from pastures to supermarket shelves. Consumers can download the JD app, scan a QR code on meat packaging, and learn all about the cow they are going to eat, its birthday, diet, weight, the date of its death, and even the name of its fat. In 2018, JD launched an open blockchain as a service platform to help other companies build their own traceable systems. And the infrastructure includes an app store with ready-to-use software solutions and blockchain-based layers. Letter of credit. Voltron accelerates transactions. Exporters operating in a highly competitive environment often have to ship their products as soon as possible before the cargo is paid for. This situation poses a high risk for sellers who usually don't know their foreign buyers personally. And to guarantee that the payment will be released on time and in full, international traders employ a letter of credit or documentary credit, a multi-step transaction that involves at least 4 parties: the buyer, the importer's bank, the exporter's bank, and the seller, and numerous time-consuming procedures. The paper-based LC process usually takes 5 to 10 days. With blockchain, the execution can be reduced to less than 24 hours. This was borne out by the Voltron platform for trade finance, founded by 8 member banks and built on the Corda blockchain codebase. Apart from letters of credit, Voltron is going to simplify other time-consuming trade finance processes such as sanction screenings and resolving of discrepancy. The platform welcomes other parties to join their initiatives via open APIs. Now, proof of delivery. Carriers and shippers are welcome to benefit from Ethereum smart contracts. A proof of delivery, or POD, is an important step in the logistics. It confirms that the product was transported to its destination safely and accepted by a recipient. Some companies still require a receiving party to sign paper forms. Others use POD software to capture IDs and electronic signatures. In any case, there's a lot of room for improvement in terms of transparency, credibility, and cost effectiveness, and this is exactly what blockchain can offer. One of the existing blockchain-fueled solutions focusing on proof of delivery visibility is OpenPort, an open enterprise logistics platform for retailers, carriers, and shippers. Its electronic ePOD system employs Ethereum, a public blockchain platform with smart contract functionality. This allows for real-time tracking of delivery events, streamlining payments, documenting transactions in immutable records, and protecting them from external threats, like errors, fraud, hidden fees, or cyber attacks. OpenPort easily integrates with existing EPR systems and third-party services, GPS providers, temperature sensors, and other IoT devices via APIs and plugins. What are the key issues of supply chain blockchain adoptions? The combination of blockchain and supply chain is often described as a perfect marriage or a match made in heaven. Yet this perfect couple still has a long way to go before it can become really fruitful. The technology is in its childhood. Keep in mind that it's only 11 years old and we don't quite understand its real capabilities and limitations. Below I list the major challenges of blockchain adoption and try to figure out how some of them can be resolved. And these are some conclusions that I came up with. 1. Fragmented software. Companies often rely on isolated systems responsible for different operations and using different types of data storage. To effectively incorporate blockchain into your existing business flow, you need to connect all data silos, in most cases even to re-architect the entire IT ecosystem. The high cost of deployment. Number 2. This drawback stems from the previous one, that the upfront cost of the technology deployment could prevent small players from participating, while the biggest players could create their own blockchains and charge high fees to be part of this. And 3, the lack of industry standard solutions. Each player creates its own version of a blockchain solution. Each of these blockchains is structured differently. There is no standardizations to promote interoperability, and it's too early for standards. This will create winners and losers. Some blockchains will survive and others will lose out. Investing in the wrong blockchain will cause some firms to lose much of their investment in one blockchain as they migrate to another, and this is likely to occur several times given the size of the global transportation/supply chain industry. Currently, Three shipping leaders and competitors, FedEx, DHL Express, and UPS, are working on developing blockchain standards that can be implemented across the industry. And all three are members in the Blockchain and Transport Alliance beta that unites over 500 freight, transportation, and logistic companies from 25 countries to encourage the adoption of blockchain applications. Next one, limited ecosystem. Even if your company is ready to employ blockchain, you can't unleash its full potential before a large number of other organizations, from government institutions to major industry players, build relevant technical infrastructures. And this won't happen overnight for many reasons. Not all companies are willing to share their data, and some of them don't understand the value blockchain can bring, and others resist the very idea of decentralization. And next one is governance problems. This vexing issue prevents many businesses from joining the blockchain community. Who makes rules? Who owns the data? How do I keep my competitors from seeing my data? What is the process to approve updates and changes that will certainly occur? And there are other political issues that require painstaking negotiation and trade-offs. But these are all issues currently being troubleshooted at the moment. And let us end an optimistic note. In spite of all challenges and institutional resistance, the potential of the technology to transform industries for the better will keep it moving forward, and there's no question that blockchain will become a huge part of the architecture and ecosystem of logistics and supply chain in near future.